All right, appreciate it. Hey, everyone, thank you so much for the opportunity to speak with you. The fact that Jeanette was able to put together a session like this to be able to bring industry leaders and traders and individuals who kind of spent the time and the effort to figure out strategies and patterns and just educate everyone, I think this is a phenomenal experience. I would strongly suggest that you grab a pen and a sheet of paper and just kind of pick out the favorite strategies that you like, and then, take advantage of watching the recording as Jeanette discussed, because the information that you're going to be seeing today and also with the other speakers is just phenomenal. And so you just want to try to find something that's going to match with your personality. So today in my section, we have about an hour with each other. And my name is Joshua Martinez. I'll do a quick little introduction in just a moment, but we're going to be talking about futures or trading on the futures market. And specifically, we're going to be discussing a strategy called tunnel trading strategy. And we're going to talk about how we can utilize that for a day trading aspect to take advantage of the intraday margin. And we're also going to utilize it for a swing trading opportunity, which will require more of a maintenance margin type of scenario. But we'll talk about that in a few moments. Now, in front of you is a risk disclaimer. It just means there is risk involved in trading futures. You should never invest money that you cannot afford to lose. Always keep equity management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. And what that basically means is I'm going to show you a complete strategy. I'm going to share with you some research, some very strong ideas, but ultimately it's going to be up to you whether or not you want to place a trade or pass on the trade. My name is Joshua Martinez. I'm a senior course instructor at NOFT. I'm a published author, international speaker, professional analyst, and I've trained tens of thousands of individuals all around the world. I'm a full-time trader, and I've personally taken a $500 US initial deposit investment, and I've turned it into over 39,000 US dollars of profit. I know what it's like to have a smaller account and needing to understand how to compound or reinvest and to kind of grow at a little bit more of a faster rate without, exposing the account to where it could blow up, as they say on the streets. Okay, I've been published in Your Trading Edge, FX Trader Magazine, Equities.com, Executive Trader, as well as TraderPlanet.com. So do me a favor, type in a yes, Y-E-S, into the question section box if you can see the S&P 500 E-mini futures. Go ahead and type in a yes if you can see that. Hey, Gloria, very glad to see you in the room. If you're looking for your chat box, all you got to do is click on that little orange button with the arrow in it, and then towards the bottom, you're going to see enter question for staff. Okay, the reason why I want to bring this up is because the S&P 500 E-mini futures is probably one of the world's most popular charts and symbols, both for the retail trader, which is classified as you and I, and the professional investor and professional trader over in Wall Street type of scenario. And what we're seeing is about a 10-year bullish trend. Basically, in the last decade, this market has just continuously gone up and up and up. And you've seen that across the board. Now, if you know your technicals, you kind of understand that this is this is referred to as a head and shoulder. It's a reversal pattern. And I want everyone in this room to be aware of this reversal pattern, because one of two things is going to take place. Either number one, the pattern is going to hold, or we're going to have what's called a major correction, which hopefully you've been hearing, because the last 10 years we had a huge bullish run, but a correction is overdue, okay? So you need to be aware of that. So number one, you can take advantage of it, okay? But number two, that you can protect yourself. Now, the second thing that could take place is this reversal pattern could fail and the markets could continue to rally. What I want to do is take you into the market, and I want to share with you the targets on both the downside and the upside. So let's talk about the downside first, okay? Anyone trade futures? Do me a favor, type in yes if you trade futures, type in no if you do not. Type in yes if you're a current futures trader, type in no. So, okay, so Robert's a future trader, Perry's a future trader, Eileen is not, Dan's not. Anyone trade Forex, foreign exchange? Forex, okay. Well, if you're a Forex trader, you know how the market, you measure market fluctuation in pips, PIP, price interest points. Well, in the futures market, it's very similar. We don't measure price movement in regards to making money, losing money. We measure what's known as a tick, T-I-C-K. And every symbol inside the futures market has a value on that tick based upon a contract, which we'll talk a little bit more in detail, okay? But in this scenario, one tick is worth about $12.50. And one of the neat things about this market is very pattern driven, and the psychology of a trader can be easily seen and recognized within the market. What do I mean by that? Well, if you buy low, you profit high, causes a wave. When the price is low, people start to buy. Price is high, people start to sell. Causes a wave movement. If this market were to wave, and if this market were to react, we are anticipating about a 5,115 tick bearish movement towards an area of previous U-turns. This is past highs becoming a future low, otherwise known as past resistance becoming future support, for those of you who are a little bit more technical. But regardless, that's about a 63,000 US dollar opportunity with one contract. And if you're an intraday trader, that's about a 500 US dollar investment, depending on your broker. And so I guess the question is going to be this. Type in a ME, M-E, into the question section box if you'd be pretty happy with an opportunity to take a $500 investment and make over $60,000 in return from it. Yeah, L.I. says me, Robert says me, Caroline says me, AKN says me, hands down. So what I want to do is I want to share with you how you can potentially amplify this at 3 times the investment. So I guess the question is, would you like for me to share with you how you can take this $60,000 opportunity and make nearly $200,000 from it? How you can take a $500 investment, intraday trade, and potentially make nearly $200,000 US dollars in return over the years to come? That's what I'm here to do, and I have about an hour to share with you the foundations of how that's being accomplished and how individuals right now already have this tool and how individuals are already discovering and utilizing this to really crank a nice consistent return. So we got to get started with some basics. So what is trading futures? Some of you who are extremely knowledgeable, don't kill me on this, okay? What I want to do is kind of explain futures in a story mode that's going to relate and where people will remember who have no idea how futures work, okay? So future trading, if you're brand new to futures, this is really where I want you to pay attention. So futures is also referred to as forward contracts. Basically, it's kind of like this. When 2 people get together, they come to an agreement to execute terms in the future. So for example, in futures, what I want you to pretend for a moment that there's a farmer, and this farmer is referred to as a producer, and this farmer grows corn. Now, he produces corn. Now, this farmer worries about prices of corn falling. The reason why is because he spent, the entire year basically prepping for, to grow his farm and to grow his corn, and his corn is not ready to be harvested until 3 months from now. Okay, everyone following along? And he knows that if he can sell his corn for today's market price, he can make a healthy profit and he can be profitable for the harvest. But his corn won't be ready until 3 months from now. So he's going to be worrying and watching the price. Well, there's also what's called a manufacturer. And the manufacturer is something or someone who manufactures something. And in this scenario, this manufacturer sells cornbread. It's all hypothetical, by the way. So this manufacturer is going to be concerned about price increasing. And so the farmer, which is the producer, grows corn. The manufacturer makes cornbread but needs corn. And the manufacturer says, hey, if I could buy a bunch of corn with today's market value, then I can make a profit. But corn's not ready until 3 months from now. So what happens? Well, what happens is the producer and the manufacturer enter into an agreement. They basically say, hypothetically, the farmer goes, I will sell you all my corn for $10,000, today's market price. And the manufacturer says, okay, that's a good deal, I'll take it. But the farmer says, but we can't execute on this deal until 3 months from now. Type in a yes, why yes if you're following along. And so 3 months goes by, and regardless of what the price of corn may be, they already locked in their rate. So corn may have increased 3 times in value, but the farmer or the producer is still obligated to sell the corn at the agreed price, and vice versa. So 3 months goes by, the farmer delivers the corn, and the manufacturer delivers the money. Now, because of this, this will assist with price fluctuation over time. And we measure price fluctuation known as Japanese candlesticks. You can also look at other bars, but this is very popular. And what you and I do is we look at this price movement as all these contracts are taking place and execution of these contracts are taking place. You and I come in and we try to make some money with it. But we don't have, we're retail traders, which basically means we don't have a farm. We don't have a factory. So how can we take advantage of these contracts and this price movement without being a producer or a manufacturer? This is where the future broker comes into play. Okay, your future broker makes it possible for retail traders like you and I to be able to take advantage of price movement without owning a big farm or out owning a big factory. You just have to understand the rules and what the broker and how the broker makes it a little easier for us. Type in a yes, why yes, if you want me to give you a high-level view of some of the rules of how to make money in the futures market. Okay, so again, this is just want to make sure you kind of understand the foundation so that when we get into the market and we take advantage of the opportunity, you kind of have a little bit of knowledge to understand how money is made and also how money is lost. So here are the rules from the broker. Let's keep it super simple. Let's not complicate this, and let's not make this sound bigger than what it is. A lot of people want to make things difficult. I'm the opposite. I want to make it real simple because simple is easy, and I like that. What we're doing is we're just betting on price either going up or going down. So as a future trader, we're just going to say, hey, I bet this much money that the market's going to go up. And if it does, we win. If I bet the market's going to go up and it falls, I lose. It's that black and white, very straightforward. Now, what we're doing inside of the future market is we are buying and selling contracts, okay? So you may hear, how many contracts do you trade at a time? Just like in the Forex, it's lot sizes. How many lot sizes do you enter in? In the futures, how many contracts do you trade with? A contract can cost between $500 and $7,000. We're going to look at a broker sheet and discuss a little bit about the intraday margin as well as initial margin, so you're well aware of it. And a broker measures price movements known as ticks. So we're going to go over an example in just a little bit, but just understand that we don't say, hey, the contract increased by 1 penny today or 10 pennies. We say, hey, there was about a 4-tick move, a 10-tick move, etc. Okay, so as a futures trader, we make and lose ticks. Type in a yes, why yes, you understand that your risk in this is losing ticks, and your reward is making ticks. Okay, that's your risk. Now, depending on the symbol, a tick could represent 10 cents of price movement, 25 cents of price movement, and the value of a tick could represent anywhere between like $5 and plus over $30. And it just depends on the actual symbol. So here's an example, okay? So in this example, let's just say we turn on our charts, we look at a symbol, and we go, hey, let's buy this. And if the market was open, we would enter in the market with one contract. And hypothetically speaking, this contract costs about $500. The broker represents one tick to represent 10 cents of movement. So if the price of the symbol fluctuates by $1 or moves by $1, that's a 10-tick move. Type in a yes, why yes, so that makes sense. So if we go, hey, the market just moved $1, what that means is the market moved 10 ticks. And the broker is going to value each tick to be worth $10. So if I say, hey, we just made 10 ticks on this trade, how much money did we make? So if every tick's worth $10 and the market moves 10 ticks, we just made $100. Okay. Now this is one of the biggest reasons why so many traders get involved in futures, because of this aspect. So let's just pretend that you buy the market at price point $2,790. That's not what you're paying because you're buying and selling contracts. That's just the value of the symbol. So you invest $500 at price point 2790. You hold on to your contract until the price is 2890, basically a $100 move, and then you close your contract. You just made 1,000 ticks because a $100 move, there's 1,000 ticks in a $100 move. So what's 1,000 ticks times that by $10 a tick? That's 10,000 US dollars. So think about this for a moment. Type in ME into the question section box if you like the idea of having the opportunity to take a $500 US dollar investment and make right around $10,000 in return in a trade. Basically having a 2,000% return on your investment size. Yeah, that's what we're discussing. And one of the things that I need you to understand is this is the big reason why hedge fund traders trade futures, why professional traders trade futures. And it's as simple and black and white as you're betting on price going up or going down, to where even though stay-at-home moms have the hardest job in the world, it's convenient enough to where even stay-at-home moms can trade futures. Listen, trading futures is providing financial freedom to a tremendous amount of individuals, but there are challenges. If you can make $10,000 in a trade, you can also lose $10,000 in a trade. So you need to have a process, you need to have a system, you need to have a methodology to where when you turn on your computer, you know how to enter in, you know how to protect yourself, you know how to maximize returns. And today we're going to utilize a solution for that, and that's called the tunnel trading strategy. It is a trading strategy designed for consistent returns. It's user-friendly, simple, out-of-the-box ready, works on TradingView, also works on NinjaTrader. So let's do this. Let's jump into the live market. Let's take a look at the S&P 500. Let's look at the targets and mark the, if the market were to fall, let's mark where it could fall to. I'll give you that price point. If the market were to rally, let's give you that price point, and then we'll go ahead and demonstrate the strategy. Okay, so do me a favor, type in a yes if you can confirm that you see the chart. It should say S&P 500 E-mini futures. Okay, thank you, David. Thank you, Perry. Thank you, LAI. Beautiful. Okay, so this is a monthly time frame. And the reason why we're looking at the monthly time frame is just because we want to see the long-term direction. The market started the bullish trend back in February, March area of 2009. So about a 10-year bullish push thus far. And we have what's called a head and shoulders, where we have a left shoulder, here's the head, and we're working on the right shoulder. Now, the last two times the price was here, price was rejected, and we had sharp downward movements. It's not a guarantee that it's going to happen again, but we're in the right spot for it to happen. Now, usually and traditionally, when the market is at a high price and it finally corrects itself and a retracement comes, it traditionally will gravitate towards an area of past U-turns. So we can clearly see that there's an area of past, here's a high, and here's a high. Write this price point down. We're going to give you the high-level price point. It's going to be target or future low price is going to be price point 1600.00. Okay. Now, how many ticks away is that? That's going to be a limit if the market were to, if this reversal pattern holds, that's a limit of what? 5,317 ticks. So you can see that here. What I'm looking at, I'm using the measurement tool. It says 5317. So 5317. Let's go ahead and write that out. 5317 ticks away. How much money is that? How much of a reward would that be? If every tick is worth about $12.50 here for one contract, we're going to take 5317 times that by $12.50, 66,462. So not too bad of an opportunity. And so I guess the question is going to be this. If this reversal pattern holds and the market begins to react bearish and begins to wave, making lower lows and lower highs, we have a $66,000 opportunity on the way down. Now, what would cause us, as on the technical side, to say, hey, the market's not going to fall? Well, if the market is able to close above this high price, it's a great sign that we're not going to fall and there's going to be another bullish push. Type in a yes if that makes a little bit of sense. So we're at the price point where the market historically reacts bearish. Basically, it means that price is being rejected. So a lot of sellers are entering into the market where we are now, and a lot of buyers are exiting the market. But if there's enough buyers that can close above the price rejection, traditionally the market just keeps going up. So if this market were to continue to go up, right, where could it go up to? Does anybody know Fibonacci's? Does anybody know Fibonacci's? Mike says, how much above the last high do you consider a true breakout? I just need it to close above. See how the price rejection? Just need it to close above. Not like a full body bullish candlestick. That's what we're going to be helping here on our side. Okay, if you don't know Fibonacci's, I would strongly suggest that you, I don't know, go on YouTube or do some reading on it, because Fibonacci's are probably one of the most phenomenal support and resistance finders that you could ever ask for. Really quick, what I'm going to do is just go ahead and plot the Fibonacci's. We use these to help us find U-turns, hidden levels of U-turns, and we're also use these to help us find our entries and our exits. So we have a bunch of lines on here, and again, I'm just going to get right to the point. We only have about an hour with each other, so actually now 40 minutes. But if this market, if this head and shoulders fails, well, then that just means we have a 5-0 retracement, or this retracement is at the Fibonacci 50% mark, and we're going to anticipate the market to push or rally towards the 1.618 Fibonacci extension. Okay, and write this price point down if you can, please. It's going to be the future high price. Just basically means a bunch of sellers are going to enter into the market at this area, and that's going to be price point 3542.50. That will be a limit if we can close above and that pattern fails. How many ticks away is that? How many ticks away is that? That's going to be from where we are about 24.33. So 24.33. So if every tick's worth about $12.50 per contract, and if you intraday trade this, is about a $500 investment depending on your broker. That's 2433 times it by 1250, 30,412. So 3412. 3412. Type in ME into the question section box if you'd be pretty happy taking a $500 investment and either making $30,000 from it or $60,000 from it. See, this is where you as a trader need to be focused in on the opportunity at hand, because realistically you shouldn't care if the market goes up or if the market goes down. You should care about is the signal on the direction, right, of picking the direction, because if the market closes above that head and shoulders, then we got a $30,000 move on the way up. And if we can't, we got a $60,000 move on the way down. Do me a favor, type in done, D-O-N-E, when you've copied down your price points, and type in, let me go ahead and zoom out. For those of you that want to take a picture of this, I would strongly recommend you take a picture. Type in done, D-O-N-E, just take your cell phone and literally just snapshot this, okay? Just snapshot this. Okay, so in trading and the futures, there's two ways that you can realistically take this. You can day trade, which is very, very popular because you can take advantage of the intraday margin, or you can swing trade, which is not very popular because it becomes a little bit more expensive to trade, and you're also fighting the execution dates of your forward contracts, okay? And so what I want to do is I want to share with you the strategy that we plan on utilizing and we currently are using right now to take advantage of the intraday market movement. And I also want to share with you the strategy that we're going to utilize to amplify these returns. Now, from our calculations, we believe that we can 3 times what you see on the screen. So the market goes up, instead of making 30,000, we're going to be looking to make about 90,000. And if the market were to fall, instead of making 60,000, we're looking to make about 180,000. And I want to share with you the strategy that we're going to be utilizing, and that's what's called tunnel trading, okay? Type in a yes if you can see the 4 screens of the 4 lines on your chart. And this is the S&P 500 E-mini futures. Every tick is going to be worth about $12.50, and it's going to cost about $500 to trade, okay? Now, what I want to do is make sure you can see directly from the broker. This is NinjaTrader, and NinjaTrader offers a charting software, but they're also a future broker. And I'm not an introducing broker. I'm not going to tell you what broker to pick and choose from, but I just want to share with you and show you so that we're all very transparent. I want you to tell me how much is it going to cost per contract. So we're looking at the E-mini S&P 500 futures, and we're going to look for the intraday to start out with. How much money is it going to cost us? So basically, what is the investment per opportunity or per contract for us? I went ahead and highlighted. Just go ahead and type this number in. I want to make sure you can read this sheet, okay? Yeah, so Robert got it, and Price got it, Caroline got it, beautiful. Yeah, it's about a $500 investment per opportunity. And it's really neat because it also will tell you what your tick value is. So your tick value is about 25 cents. So if the market moves $1, that's a 4-tick move. And that's going to be about $12.50 per tick, okay? So let's continue on. Now, so every opportunity is going to cost about 500 bucks. Every tick is going to represent about 25 cents of movement, and the value of a tick is $12.50. You have 4 lines here. You have a blue line, 2 green lines, and a red line. The blue line is going to be the limit. The 2 green lines are going to be strategic entries, and the red line is going to be the stop. What I want to do is I want to focus in on the end goal in mind, and that's going to be the exit. Every trader is trying their very best to close their positions with profits. I think you would agree with that. We all accept the risks that are involved in trading, so we also know sometimes we're going to lose, and if we just want to make sure we win more than we lose. So the blue line is going to be the limit. What I want to do is I want to zoom out, and I just want you to look at the charts. And I just want you to look at the candlesticks, okay? And I want you to answer this question. Is the market hitting the blue line basically on a daily basis? Did the market hit it on this day? Did the market hit it on this day? Did the market hit it on this day? What about here? What about here? What about here? Are the candlesticks going through and touching that blue line over and over and over again? Yes or no? 1, 2, 3, 4, 5, 6, 7, 8. The last 9 days, the market touched the blue line every single day. Let's look at another 9 days. Market touches the blue line here. That's 1, 2, 3, 4, 5, 6, 7, 8 days. Look, when we go back days and weeks and months, do me a favor, just type in a yes if you can visually confirm that the market is touching that blue line over and over and over and over and over again. This is going to be extremely important to our success. Now, I want you to logically think about this for a minute, okay? If the market is touching this blue line over and over and over again, pretty much on the daily basis, it doesn't matter how far back we go, it's holding true, then all we really need to do is strategically buy below the blue line and then use the blue line as an exit. Type in a yes if that makes a little bit of sense. And so what I want to do is I want to teach you and I want to share with you how to use a tunnel trading strategy to have tunnel vision on your profits so that we can focus in on the end goal in mind, which is trying to exit our positions in the profit. Okay, now here's how this is going to work. I'm not going to go back. I guess I can, but you tell me, do you want me to go back months and months and months and show you what happened months and months ago? Or do you want me to show you what happened last week? Want me to show you how much you could have made or how this performed last week and basically why so many individuals are just crushing the market with this? Yeah, let's do that. So M Price is last week, Davis is last week. Okay, so let's do that. So I'm going to teach you the first couple I'm going to teach you the rules. So what I want you to do is get out a pen and sheet of paper if you want to write down the rules. And what I want to do is I want to educate you on how to use this, because some of you are going to have an opportunity to use this. I want to make sure that you can use it right away. So here's how this works, okay? When or if the market touches the green line, we're going to buy the market. We're going to place our stop at the red line. We're then going to limit out at the blue line. The second green line is strategic re-entry to help us make back a losing trade. Okay, we're not going to demonstrate how to utilize the re-entry unless we have a losing trade. Okay, so it's going to be up to the market and the performance of the strategy for that to work. So I'm going to explain the first couple. I really want you to pay attention, and then you're going to tell me when to buy and then when to exit. Okay, so here we go. Market touches the green line. When the market touches the green line, I can then enter into the market with my desired contract size. So I enter the market buying. I'm going to place a fixed stop at the red line. A fixed stop just basically means that I'm not going to move my stop price, okay? So this is my market buy. I'm going to enter into the market, and then I'm going to place my stop. It's going to be a fixed stop, so I'm not going to be moving it or adjusting it. When or if the market touches the blue line, I'm going to close my position. Every candlestick represents 5 minutes. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. About 1 hour into the trade, the market touches the blue line. Trade is done, trade is over. Now, what I want you to do is tell me how many ticks were we able to make? What number does it say right here? This is what's called a measurement tool. This automatically measures the ticks, so I don't have to do the math. But what does that say? That says what? Yeah, David nailed it. It's 1-5, 15. So we just made 15 ticks. And how much money is that? Well, if every tick is worth $12.50. That's $187.50, 187.50. So here's a question. Type it to me, M-E, into the question section box if you'd be pretty happy making $187 in about an hour. So you place a trade, about an hour goes by, you make just shy of 200 bucks. It's not too bad. So if you're anything like me, you're not going to want to be sitting in front of your computer and then just waiting and waiting and waiting and waiting. So what you can do is you can set an alarm. So here's a neat thing. If I right-click on my line, I can add an alert. I can receive a text message. I can receive an email. I can receive a pop-up notification letting me know when it's time to enter into the market and notifying me when to take action. It helps me understand when to enter in and also when to close. Okay, I'm going to show you the next opportunity, and then you're going to teach it to me, okay? So here we go. We're going to look for the market to touch the green line. We're not going to enter into the market buying. We're not going to hold on to our positions just because the market kept going up. We're not going to do that. We're literally going to repeat a process, and we're going to have a way of trading that's going to help us duplicate returns. Bingo. Type in a yes if you can see that the market touched the green line. Okay, so that's going to be the market buy. So we're going to enter into the market with our desired contract size. So that's a market buy. We're going to place our stop at the red line. And it's going to be a fixed stop, which means we're not going to move our price point. So this is our stop. And when or if the market touches the green line, the blue line, we're going to close out. Let's see what happens. So 5, 10, 15, 20, 25. Within 25 minutes, we touched the blue line. I could have received a text message, an email, a pop-up alert, a notification, and I made 13 ticks. So 13 ticks within 25 minutes, 13 ticks equals 13 times that by $12.50, $162.50, $162.50. Okay, so would you be pretty happy making about $162, give or take, in about 30 minutes of trading? Now, what makes this so great? Well, what makes this work really, really well is the win percentage. So on the S&P 500 this year, it's winning about 74.4%. On the NASDAQ 100, it wins about 73.1%. So far, it's winning on average about 73.8%, and it's made about 14,000 US dollars thus far, trading one contract at a time. So basically about a $500 investment average for intraday, and about a $14,000 return and counting, about 73%. Now, there's two strategies that we teach. Strategy one is a day trading strategy, and sometimes the risk is going to be larger than the reward. And what we do is we lean on the win percent of over 70% to make up that difference. And it works very, very well. Some traders, they cannot, they don't like to risk more than what they could potentially make, and I get that, and so this day trading strategy may not be for you. But we do have a strategy two, which is our swing trading strategy. In strategy two, your limit or your reward will always be at least 2 times the risk. Okay, so here's what I want you to do. I want you to type in buy, B-U-I, when it's time to buy the market, okay? So just type in buy, B-U-I, whenever the market touches the green line. Is it time to buy? Caroline says it's time to buy. David says buy. Peter says buy. Gerald says buy. We're going to buy. Okay. Where do we place our stop? Where do we place our stop? We have about 20 minutes left with each other. I want to make sure you understand how to use this because some of you are going to be able to get your hands on it. You can start on Monday. We're going to place our stop at the red line. Tell me when to close my position. Just type in close whenever it's time to close, okay? So it goes against us, goes for us. We can receive text messages, emails, pop-up alerts. Bingo. Charles says it's time to close. Okay, so you enter the market buying, you exit, 12 ticks, and if you did this trade, 12 times it by $12.50, about 150 US dollars. Not too bad. Let's keep going. Let's see if there's any other trades available. Okay, so tell me when to buy. Is it time to buy? Type in me if you think you can do this. Type in me if you think this is simple. Type in yes if you're getting this. Yeah, that's what it's for. It's designed to be out-of-the-box user-friendly. Stop goes at the red line, so let's see what takes place. 5, 10, 15, 20, 25, 30, whoops, and trade is over with. Day's over. We close it at the end of the day. Day's over. So what did we end up doing? Nothing crazy. 1 tick. And so, you know, between spreads or whatever, we probably didn't really make anything. But we didn't lose anything, which is good. Okay, so let's keep going. Anything else? I don't know. Tell me when to buy. Now, do you have to be in front of your computer all day watching this? Nope. That's a great question. You can receive text messages, emails, pop-up alerts. We also have an automation feature we built on NinjaTrader to where automatically we have a strategy that can automatically enter you in, automatically place your stops, and automatically place your limits, which is very convenient. Oop, there it is. Charles says time to buy, and Price says time to buy, David says time to buy, let's buy. Okay, where do I place my stop? Stop goes at the red line, beautiful. Tell me when to close. Okay, tell me when to close. Bingo. All right, so from the entry to the close, this was 7 ticks. Let's see if we can get another trade. 7 ticks, that is a total of 7 times it by $12.50, $87.50. $87.50. Are we doing the same things over and over and over again? Yes or no? Are we following the same process over and over and over again? Are we, excuse me, are we taking action when the market touches the green line? Do you think you can do this? If you're going to pick a strategy, you want to make sure the strategy is easy enough for you to follow. And I guess the question is 5, 10, 15, 20, 25, 30. Would you be happy making 14 ticks within 30 minutes? How much money is that? Let's see, 14 times it by $12.50. Would you be happy making $175 within 30 minutes? Eileen says, what is the green line, the second green line? That's a re-entry strategy. The reason why this works so well is because the market touches the blue line basically on a daily basis. Look, market touches the blue line on a daily basis. So touches it, touches it, touches it, touches it, touches it, touches it, touches it. So all we're doing is we're recognizing that the true benefit of tunnel trading is focusing in on the exit and trying our very best to exit with profit. So we are strategically entering into the market below the blue line with the understanding and confidence that the market is continuously hitting the blue line, and you can see the results are speaking for themselves. It's just phenomenal. All right, let's see if we can get any more trades. DIL says, what is the blue line? That's where, that's the formula that we keep secret. Some traders, some people can understand that. They respect that. Some traders don't like that. If you have to know exactly what the formula is, then this isn't going to be a strategy you want to use, because we're not going to share it. But we will give the strategy for sure. We just won't give the guts of it. Okay, so here's the entry. Here's the stop. Okay, let's see what happens. Did we win? Did we win? Nothing crazy. Let's call that 9 ticks. So 9 ticks. And how much money is that? 9 times that by $12.50, $112. So oftentimes what we're starting to see is that if you trade a one contract at a time, we're putting ourselves into a position to be able to make upwards of $500 a day, which is phenomenal. Now, if you traded 2 contracts at a time, well, you know, you're going to be able to maximize your experience. Are you able to trade does this work on multiple symbols? Oh yeah, absolutely. Here's this, 28 ticks. How long does this take? 5, 10, 15, 20, 25, 30, 35, 40, 45. 45 minutes, make 28 ticks. 28 ticks. How much money is that? $12.50 times that by 28 ticks. Ooh, $350. So $350. So on this day, what day was this? This was the 25th. So on Thursday, you could have made $112 and then $350. That's about a $460 a day so far in 2 trades. And you're only trading 1 contract at a time. You're not, and you don't have 1 position open at a time. So it's not like you're managing 5 or 10 open positions. You can receive text messages, emails, pop-up alerts. Okay, so I'm going to keep going with this. And what I want to do is I just kind of want to ask a very simple question. And I'm going to be very transparent. I have about 15 minutes left with you. And I want to show you multiple, I want you to know that this works on other symbols too, and which I want to point out. But here's the deal. This is a brand new launch, which means it's a new strategy. And we're going to be having a class on the 30th. But I have about 7 spots left. And I do have an auto trader to where this can be automated, where we have a strategy that automatically enters in for you, automatically places your stop for you, automatically places your limits for you. You have all the control over your risk. You can decide your own contract sizes. You can receive text messages, emails, pop-up alerts. Some people at this time already know they want this. They want to get their hands on it. At the end of this session, what I can do is I can have our education specialist contact you and answer your questions and give you the ability and the opportunity to sign up if you want. If you want me to put you on a list to be contacted, to give you the opportunity to say, yes, I want this, or no, I don't, here's what I want you to do. Type your telephone number into the question section box right now. When you type your telephone number into the question section box, what will end up taking place is we'll contact you at the end of the session. I will share with you how to sign up here in a few moments, but I understand it's going to be first come, first served. And I got 7 spots left for signups today for my class on the 30th, and we can get this materials in your hands so you can be rocking and rolling by Monday as well. Okay, so what I want to do is just let the following individuals know that, hey, we have your telephone number and we'll contact you at the end of the session, okay? So, hey, KG, got your telephone number, LAI, William, Kelvin, have your telephone number. Carrie says, what is the price? I'm going to share the price with you in just a few moments, but if you're kind of like, hey, as long as the price is reasonable and as long as this is affordable and as long as this doesn't cost like 50,000 bucks, this is something that I can use, you may want to type your telephone number in. If not, I completely respect that. No big deal. Okay, so if you did this on Friday, you would have had 19 ticks on this trade. So that's 19 ticks. And how much money is that? So if you did this on Friday, that's 19 times it by $12.50, $237, $237.50. And then you had another trade here you bought in, and that's 22 ticks. So 22 ticks, that is how much? 22 times that by $12.50, $275. So if you did this on Friday, you could have had a trade to make $237. You could have another trade to make $275. So how much money is that? Plus $237.50. You could have made over 500 bucks on Friday alone, just on these two trades. Okay, so Darren says, can you show the auto trader? Here's the results of the auto trader. I think maybe this is what you're searching for, but this is trading one contract at a time from January 7th to April 17th. And again, you could have traded more if you wanted to, but this is, it's 8,250 US bucks. It's working very well. Does it win all the time? No. You can see there's winners and there's some losers. It's relatively amazing. Does this work on other symbols? Yes. So here's the E-mini Russell. And so you can see clearly, we just kind of look at this. You can kind of see that last week alone, I'm running out of time, so I'm just going to highlight the trading opportunity. So that's a winner. Okay, so that's a winner. That's a winner. I think this one lost, and then you made it back up. So that's a winner. That's a winner. So on just a handful of days, you could have, what? This is how many ticks? This is 27 ticks there. This is 22 ticks, 21 ticks. It's a nice little home run. Ooh, look at that, 106 ticks. That's nice. This is 25 ticks. In oil, everyone knows oil, crude oil is very, very volatile. And even if you trade it, you can kind of see here's 27 ticks, but each of these ticks is worth 10 bucks. So that's $270 there. Here's $113 here. And why does this work so well? It's because we cracked the code on where the market wants to go. Type in a yes if you can clearly see that the market is touching the blue line over and over and over again. And it doesn't matter what symbol we touch. Basically, it's touching the blue line on a daily basis. And strategically, we're utilizing the tunnel vision on our exits and utilizing the tunnel trading strategy to strategically buy below the blue line so we can exit in the profits. That's why this works so well. Okay, type in me, M-E, if you want me to kind of share with you how to get this. Type in me if you want me to walk you through what you get, how you get it, how you can sign up. And I'll take about 5 minutes, then we can do questions and answers. Okay, so here's what we have. Now remember, you can receive text messages, you can receive emails, you can receive pop-up alerts. It's very convenient and is designed with you in mind, which basically means, if you're on the go and you can't be in front of your computer, we don't want you in front of your computer living and dying by each candlestick. So this is very convenient. Performance matters because performance changes lives. On the S&P 500 for thus far this year, about $8,362.50, trading one contract at a time, winning 74.4% of the time. On the NASDAQ 100, 73.1% win rate and about $5,810. That's over $14,172 in return, and that's trading one contract at a time. So, and that's on two future symbols. So you're not like you're managing or trading 10 at a time. That's a run rate of about $56,000 this year. So return on the investment, one contract at a time, you're on pace to make $56,000. If you invest or reinvest and trade two contracts, It's an extra $113,000. Type in me, M-E, into the question section box if you like the idea of being able to make an extra, I don't know, $100,000 this year and just trading 2 contracts. It's a possible. Some of you are going to take this much further. It's just going to be completely up to you how far you want to take it. But the secret is out, and the pros agree. Trading futures can be one of the fastest ways to success. The big question is, will you be the next success story? And ultimately, you have the decision to make. So this is what's called the Tunnel Trading Course. It's a trading strategy designed for consistent returns, designed for all future symbols, user-friendly, out-of-the-box ready, works on TradingView and works on NinjaTrader. It's a 4-hour class going to take place on April 30th. We have the tunnel trading system that you can receive right away. You have 3 strategies, and every strategy has a buy side and a sell side, so we're well prepared for a potential correction within the market. You get 6 checklists, how-to videos, online education portal, which you get access right away, and you get recordings of the Kickstart class, which I just hosted, and the total value is $3,495 US. So everything in this world comes down to an investment, return on the investment. And so what I want to do is ask you, what would you have to get in return to make it worth it? So let me ask you, if all this strategy did was just help you make an extra $7,000 a month, month over month over month for the rest of your life, would it be worth the investment? Yes or no? If all this program did was just give you the life skill to be able to make the money so that you could just start to travel or simply just spend more time with your family and loved ones, would that be worth the investment? Stop and really think about it. And if all this program did was give you the ability to structure your retirement within the next 12 months, would that be worth the investment? Now, because this is a launch, what we're doing is we're providing what's called a launch savings or celebration launch savings. And so for today, we have about 7 spots left for this class. And for those of you that take action, and by taking action is simply typing your telephone number into the question section box, and we can speak with you, or one of our education specialists can answer your questions, or we're going to give you a sign up now link. But you can enroll into this entire program with about a $2,000 US savings, so it's just $1,497. So at this point in time, if you would like to sign up and reserve a spot, first thing you got to do is go ahead and type your telephone number into the question section box now. I want to go ahead and recognize the following traders who just typed their telephone numbers in. Now, I want to make sure we're being very, very transparent. Now, the $1,497 gives you access for 12 months, okay? So we do have a lifetime ownership to where you can own the entire program, the software, the automation forever. There is an aspect. If you're interested in that, just speak to the education specialist. But this will give you 12 months access on the $1,497. Angelo, have your telephone number. Pierre, have your telephone number. Thank you so much. Scott, got your telephone number. Now, I'm going to go ahead and post a link in the question section box. Let me go ahead and send it to all. There is a link in the question section box. If you click on that link, it's going to bring you directly to a sign-up sheet, which I'm going to show you in a moment. But really quick, we do have what's called a launch bonus. And this launch bonus is going to go away. And basically, this just means for those of you that sign up now, those of you who sign up today, you're going to get this. We have 7 spots left for today because we have 7 spots left for the class on the 30th. Now, we have what's called a automation. It's full automation that works on NinjaTrader. Why NinjaTrader? Well, NinjaTrader is a charting software, but they're also a broker. And so what we did is we created a strategy that automatically enters you in, places your stops, places your limits, and it can be executed utilizing the NinjaTrader platform, which we like. So again, if you want this, here's what I need you to do, okay? Type your telephone number in with the promo code BONUS, B-O-N-U-S. And when you type in the promo code BONUS, B-O-N-U-S, it just lets my education specialist know that you want to sign up today and that we're going to go ahead and add on the auto trader to your experience at no additional charge. It's relatively phenomenal. Hey, David, I got you for bonus. Peter, I got you for bonus. Perfect. So if you're ready to sign up now and you don't really want to speak to anybody, click on the link in the question section box. KG, got you for bonus. When you click on the link, it's going to bring you directly to this 100% secure online sign-up page. Hey, Kevin, have you for bonus. So how do you fill this out? Well, click on the link, and all you got to do is put in your first name, last name, email address, phone number, billing information, credit card, and you're done. You can see you complete your order. It can take you 30 seconds to a minute max. Relatively straightforward, right to the point. Okay, so questions. Do Q&A. Questions. Peter says, how much can I realistically make? Okay, that's a good question. So here we go. So let's just say, hypothetically speaking, you know, we already showed all the results, and we showed what you could have made last week. We looked at multiple symbols, but we're expecting traders to put themselves in a position of great abundance. And I need everyone to understand that why does someone go to school? Why does someone read a book? Why does someone invest into their education? It's so that you can obtain a life skill to make your time worth more, right? You go to school, kids go to school to get a degree to say, hey, I know this much, so therefore I'm worth this much. And then it's ultimately up to the person or who has the knowledge to extract the return. So people get, so I'm reading Think and Grow Rich, and the book, and it says in there, you don't get paid with what you know, you get paid in what you do with what you know. And so what we're looking to do is we're looking to educate you, empower you to make your time worth more money. And so you could have days to where you buy the market with just one contract and you make $250, $250, $237. So we're looking to help you make your time and make your returns worth over $700 in a single day. In this scenario, you have 3 opportunities to make $150, $175, $212 to help you make over $500 in a single day, to be able to make nearly $500 in a single day. We're also going to look to make things very convenient for you and give you an opportunity to get your hands on the automation, so this way you can put yourself in a position of making residual income. Now, what is residual income? Residual income is just making money while you sleep. This is allowing your money to make money, and that's where the automation comes in. But we're going to make sure that you're properly trained on the automation, so we're going to release that on the 30th. I got about a minute left, but this is the tunnel trading strategy, and it's perfect for new traders and experienced traders, but you got to take action now to take advantage of the launch savings. Hey, GUI, got your telephone number and have you for bonus. We can contact you, not a problem. Now, M Price says, what is the max loss per trade? It's going to depend on trade per trade. Strategy 1 is a day trading strategy, so let's just say volatility is relatively high. You know, sometimes you're going to be risking like 10 ticks, and sometimes you may have to risk like 70 ticks. But you're going to be in a position to control that, and you're going to be able to put yourself in a position to say, hey, this is my requirements. And that's part of the class where we kind of make it very transparent, where we don't hide anything, and we make sure that you're well equipped to find the trades that you want to find. Okay, so Charles, got your telephone received for bonus. Perfect. Hey, everyone, I just want to say thank you so much for the opportunity. I want to say thank you for Jeanette for allowing me to be on here. For those of you who expressed interest, stay by your phones. We're going to reach out to you. For those of you who are using the link and signed up, congratulations. We're going to send you a confirmation email just letting you know that you enrolled to the program. We're going to send you your username and passcode. You get access to the how-to videos, the manuals, the on-demand recordings, and the checklist right away. So you should be getting all that information relatively soon. And make sure you get a pen and sheet of paper, because the instructors and the traders and the gurus that are coming on have a wealth full of knowledge, and they're all here to help you find that strategy that can help you and empower yourself to find those returns you're searching for. So thank you again, and on that note, every day, helping people find their way. This is Joshua Martinez, out.